Alright guys, welcome back to my YouTube channel. Today we're going to be talking about the market update, and we're going to be looking into the Durham region, Oshawa, and we're going to be taking a look at what prices have done from February to March. I want to go over prices, I want to go over new listings, I want to go over terminations, I want to show you some data of some good purchases that happened on the MLS to essentially show you that although the market, there's a lot of noise around the market right now, it's still a good time to be active and looking, because this is when opportunities are around. So if you can, please like and subscribe to the channel so you're kept up to date with what's going on in the market. And if you like, you can book a call with me via my link below if you have any specific questions or you want to talk about your personal investing scenario. All right, so let's jump right into it. So what I've done is I've gathered prices, average prices for detached homes sold in the Durham region, and I've kind of done a comparison to see what's happening from February to March. I've done a comparison for the Durham region, and then I've done a comparison to some of the other areas that people are interested. So for example, York, Toronto, Peel, and Simcoe. So let's jump right into it. Here, if we take a look at this chart, we have detached prices February 22 versus March 2022. If we look at prices in the Durham region, we went from 1.379 million to 1.254 million. That's a 9% decrease month over month, which is fairly material because when we break it down to certain type of homes, detached, semi-detached townhouses, we're seeing a material price drop in particular homes. So for example, detached homes have seen a temporary drop of $80,000 to $100,000. And I say temporary because I believe that there's a lot of noise in the market right now with interest rates, with what's going on around the world. Do I think that these prices are going to remain low? No, because of the supply and demand issue. But for now, this is the data. And when we talk about Durham, people say, okay, well, Durham has dropped 9%. What's happening to some of the other regions? So if we take a look at York, York went from 1.992 million to 1.892. That's a 5% decrease month over month. The region of Toronto, which is a fairly large region, went from $2 million to 1.92. That's a 7% decrease. Peel from 1.7 to 1.6, which is a 4%. And then Simcoe County, which is around the Barrie area, from 1.3 to 1.259. That's a 5% decrease. So if we take a look at the areas that have remained fairly strong, it's the Peel region, it's Brampton, Mississauga area, and these areas, they've always maintained a strong housing market. I believe due to their infrastructure of having the highways nearby, the hospitals, the airport, and a lot of commercial space in their area. Now, we've seen a price decrease, but what is that as a result of? I think personally, I believe that it's due to the number of listings that are coming to market. So what I've done for the areas that we spoke about, I've gathered data for new listings coming to market. So if we look at the Durham region in February 22, there was 1,127 new listings in the month of February. In the month of March, there was 1,640. So there's a 46% increase in inventory, which essentially means that there's more supply in the market. As there's more supply, the number of showings decrease, and as the number of showings decrease, the number of offers decrease, and as the number of offers decrease, the selling price decreases because there's less leverage to negotiate a higher price. Now, as I said, we saw price increases in all the other regions. So as a result, we're seeing a number of listings increase in those other regions as well. So York region is up 34% in terms of new listings, Toronto 39%, Peel 38%, and then Simcoe 53%. So now that we've spoke about detached prices, number of listings, let's take a look at properties that are not selling in this very moment. So what I've done here is I've gathered data for the months of February, March, and April. And what we're doing is we're taking a look at number of terminations and suspensions. And why is this important? Because for a listing to be terminated or suspended, that means that the sellers did not get the price that they were hoping for, and as a result, they had to take the listing off the market. So if we take a look at February, in the first week, activity was okay, it was fairly normal, and business as usual. So first week of February, nothing crazy. Second week of February, we start seeing a bit more terminations happening. Week 3, we start seeing a ramp up. And then week 4 is when we start seeing that turnaround of terminations happening more than the previous weeks. So in the month of February, total terminations in Durham was 205, and then in Oshawa it was 52. Now, a lot of the action and a lot of the terminations began in the month of March. So if we take a look at the first week of March, in Durham there was 90 terminations, and in Oshawa there was 27. And as you can look at the chart yourself, we start seeing an increase in the number of terminations. And for the month of March, we had 692 terminations in the Durham region and 216 in the Oshawa region. So that is a fairly material number. And even if we fast forward to the first week of April, you can see that we already had 198 terminations in Durham and 53 in Oshawa. And that is perhaps, if we take a look at some of the highest months, it's already up there. So week 4 and week 5 of April, we had some record breakers, and we can already see that first week of April, we are up there in terms of number of terminations. So I think this is essentially what's happening is that, again, there's the increased number of listings coming to market. We know that there's going to be an interest rate announcement coming April 13th. And there was the new federal budget announced as well, which has a lot of impact on real estate prices. But I would say out of those two items, I would say that the interest rate announcement April 13th is going to be the biggest shocker. And with that, essentially what's happening is that there's a lot of noise that instead of having a 25 basis point increase, there's going to be a 50 basis point increase. So that is going to have a bit of an impact on affordability and what people can afford. So as a result, that is going to reduce the number of offers going out, and as a result, reducing the average price in the market. In the month of March, I was monitoring the market fairly well, and what I was trying to do was I was trying to find opportunities for my clients to purchase. And I was saying that there's a lot of noise, there's a lot of terminations in the market, people are not getting what they want. There's going to be a number of panic sellers. So this might be a really good time to be active in the market to try and find essentially a good deal that you can purchase. And I've found here 2 properties that I want to show you guys. And essentially these are properties that in a normal market, in an open market with no noise, with no disruption in terms of the market, I would expect these properties to sell for much higher than they did. So the first property is 106 Crawford Street in Whitby. This is a detached bungalow, typical type of bungalow that we look at when we're looking at investment properties. It's a 50 by 131 foot lot. It was listed for $988,000. It was on the market for 26 days, which is extremely high. Right now, the average for the Durham region and Oshawa is around 6 to 7 days. So this property was listed for $988,000 and it sold for $1,050,000. What I'm going to do is I'm going to show you guys some pictures of this property, just so you can get a sense of what we're dealing with. So here we go. If we just take a look at the pictures, nice detached property, double wide garage. It already has a garage that can be used, and as a result you can demand a premium for it. You can see that the house is renovated, the kitchen is renovated, it's picturesque. When you post this on the websites for lease, you're going to attract some good quality tenants. The rooms are nicely done. There's some sort of vinyl flooring, new paint, and here we go into the basement. You can see the basement is fairly bright as well. The bathroom is renovated in the basement. This is the separate entrance. Backyard is fairly open. It's going to be a shared backyard. So in my opinion, this, in a market where there was no noise, no interruption, should have been a $1.2, $1.3 million sale. Let's take a look at another property. Another property that I want to show you guys is a detached bungalow in Oshawa, 109 Bell Drive. Again, this property was listed for $998,000. It was on the market for 5 days, so more of the normal trend, and it sold for $1,075,000. And this was in fact a legal duplex. So if we take a look at some of the features here, 50 by 184 foot lot in Whitby, which is a high demand area. If we take a look at the pictures, This is newly renovated, new floors, new kitchen, new pot lights. Here we go. We see some pictures here. It's a very beautiful property. I think you can demand high rents for this upper unit. You can probably attract, $2,500–2,600. As we look at some more pictures, it's got an open concept feel. Bathrooms renovated, bedrooms are renovated. And let's see if we can take a look at the basement. So here we go. We're going into the basement. This is the basement. Again, open concept. Same kind of finishes upstairs. There's the kitchen. There's a TV room. Bathroom. Bedroom. And carport, which is nice. Laundry and side entrance. There's the backyard. Backyard is not as nice. There's no grass, but hey, it is what it is. So yeah, in comparison, sold for $1,075,000. I think that if this was in January or February, this could have sold for 1.3, even 1.4 perhaps. So these are examples of times where if you're an investor, you should be active even during these times, and you should essentially be extremely aggressive during these times because there are opportunities and there are going to be panic sellers in the market. So that is a high-level overview of what's been going on in the market in the month of February versus March, and what is happening with some prices and some recent sales in the market. Another thing that I want to point out is that we're starting to see more and more comments of listings saying that they are open to preemptive offers or bully offers. So I would say for the last 6 to 8 months, we've been seeing a lot of listings that explicitly say they're not looking at offers until a certain point in time. So perhaps 1 week for the property to sit on market. I would say that I'm starting to see that shift where agents are saying now they will consider preemptive or bully offers, which is really interesting because it's going to allow people to essentially come take a look at the property. If they like it, get aggressive and submit an offer. So one of the other things I wanted to talk about since the federal budget came out was some highlights surrounding the housing crisis that's happening in Ontario and in Canada. So here on my computer, I have essentially a summary of what's happening in terms of the budget. There are 6 items here that we're going to potentially speak about, and I'll essentially tell you what my thoughts are on whether I think that these are going to have a positive or negative impact on prices. So let's jump right into it. Doubling the first-time homebuyers tax credit, going up to $10,000. This measure would apply to homes purchased on or after January 1st, 2022. So the first-time homebuyers tax credit would be towards land transfer tax. Essentially, in previous years, you would apply for a rebate of $4,200. Now that's been increased to $10,000. Is it going to have a material impact on prices? I don't think so, because this is essentially a closing cost that you have to pay out of pocket. So it doesn't necessarily have an impact on your mortgage. And if anything, it's going to allow people who perhaps needed a slight help jump into the market. Is it going to have a negative impact on prices and reduce prices? In my opinion, no, it's not. Next item is curbing foreign investments and speculators. Essentially, what's happening is that this clause would prohibit foreign commercial enterprises and people who are not Canadian citizens or permanent residents from acquiring non-recreational residential property in Canada for a period of 2 years. I'd say this is an interesting one because the government can essentially put this out and say that this has had an impact on prices, but I would say we're already seeing a correction in prices coming down. As I mentioned, the Durham region is down 9%. The rest of the GTA are approximately 5 to 6%. So I would say we're already seeing a pullback in prices, and I don't think this is going to have a material impact on prices. You can perhaps say that because of what's been happening with the pandemic, people overseas are frustrated and want to move into, take their money out of their economy and invest it elsewhere, and perhaps come to Canada. That could be an argument. But we can also argue and say that the Canadian economy has been extremely, tight during the pandemic and closed for most of that period. So it's hard to say what this is going to do. I think it's a good policy for the government to put out there, but whether this is going to have an impact or not, it's hard to tell. The next one is kind of interesting because I believe that this was already there. Making property flippers pay their fair share. Any person who sells a property that they've held for less than 12 months would be considered flipping properties and would be subject to full taxation on their profits as business income. So this is interesting because from what I know, people who are flipping homes are typically doing this in a company and it's already considered active business income, and they are paying tax on essentially the income that they generate. You can perhaps argue that this is going to have an impact on people who are not purchasing properties in a corporation. Typically, people would purchase a property to flip and they would argue that it's capital gains versus business income. If it's capital gains, you're going to only pay 50% on the gains that you are generating versus 100%. What this is saying is that 100% of the income is going to be taxed. I'd argue and say that this was already out there, and people who are doing high volume flips are doing it in a corporation. So I don't really know what this is going to achieve. The next one is interesting. Taxing assignment sales. So this would be for people who are purchasing pre-construction condominiums, and instead of closing and taking a mortgage on it, they sell their contract to someone else. I do like this because there are a lot of people who are purchasing pre-construction condominiums and assigning the contract. So this would be a good opportunity to try and generate some tax revenue dollars. The second last one that we're going to talk about is multi-generational home renovation tax credit. I think that this is a nice thing for the government to put out there to win some votes, but it's so immaterial. Essentially, they're going to support these families with the budget of giving them a tax credit up to $7,500 to build a new secondary suite for the purpose of a senior or an adult with disability living there. $7,500 to me is so immaterial. This doesn't even cover your drawing costs to get the project up and running. So to me, this is so immaterial. It's going to have a zero impact on prices. And the last one, home buyers bill of rights. To be honest, I don't even know what that is, so I'm not going to get into it. But essentially, out of the 5 things that we spoke about, I would say there's perhaps one item, tax on assignment sales, that may have an impact on pre-construction properties and not necessarily resale properties. So thank you for watching this episode of a market update in the Durham region in Oshawa. As always, if you like, you're more than welcome to set up a call with me. We'll leave my link below. We can have a personal conversation on your specific needs and what you're hoping to achieve. This is a string-free phone call, so there's no commitments afterwards. But I'm more than happy to jump on this phone call and hear you out and give you my opinion of what you're trying to achieve. Again, thank you for watching. If you can please like and subscribe to the channel, that would be greatly appreciated. And it would essentially get this video to more people who need to listen and learn about what's going on in the Durham region and Oshawa.